So welcome to this video. In this video, we are going to discuss about what is budget. And the first part of this video would be like discussing about theory. Then we'll move on to the problems. So the theory would be in terms of case studies. And these are like lengthy case studies where we apply the concepts of budgeting to a particular company. So we shall start from the meaning of what is budgeting. A budget is a quantitative expression of a plan for a defined period of time. It may include planned volumes, revenues, resources, quantities, cost, expenses, asset, liabilities, and cash flows. So this definition is given by SEMA. So what is a budget? See, a budget is nothing but a plan for the future. Okay, it's a plan for the future, but this plan is expressed in terms of numbers, and this plan is also for a very short period of time. So short period of time is within a year. So we create a budget only for a year period. Okay, so usually budgets are only for a year period. Beyond that, we don't do a budget. Okay, and budgeting is a process of expressing the predicted cost and resources for a planned course of action over a specified period of time period. Okay, so he said this kind of a definition or meaning tells that a company has a particular strategy which they want to achieve, or they have a particular plan to be achieved. That plan is expressed in terms of, again, cost and resources. Okay, so budgets can be drawn up for business units, departments, products, teams, or entire organization. So budgets can be created for even for a unit, department, product, teams, or an organization. Another term for a budget is financial plan, but budgets can refer to non-cash resources such as staff or even time. So budget is not only for monetary things; it can also be for qualitative things such as number of staffs allocated to each department, or the total time available in terms of machine hours or labor hours, and how that is being allocated to different departments. Okay, so budget is just an estimation of the future which expresses numbers. Okay, and that too it for a short period of time. So that is about the meaning of budget. So let's see how budget is being practiced. The main purpose of budgeting relate to planning and control. So budget can not only be used for estimating our plan in numerical terms, it can also can be used for in terms of control. Okay, so to control the company, budget is like very important here, and supporting the achievement of strategic plans. Okay, so it also helps to achieve the strategic plan of the company. So translating the long-term plan into annual work programs. So a company might have a very long-term program, something like 5 years, what they do, what they want to do, or what they want to achieve. So that 5 years plan is like divided into small 1 year plans. Okay, and these 1 year plans are in turn again broken into per month plan. Again, that 1 month plan can also be broken into 1 week's plan. Okay, so that's how the long-term plan of a company can be broken into a very short-term plan. So coordinating the various departments of the organization to ensure they are working in harmony, a budget requires managers to consider the relationship between their operations and those of other departments. Otherwise, managers might make decisions in their own interest rather than the company's best interest. Okay, so each budget also helps in coordination. Why does it help in coordination? Is it helps managers to see how they are linked with other departments. Okay, so if you take like sales department is like linked with the production department. Okay, so sales is also linked with finance department, because whatever the units they are selling, they will make payment to the accounts or finance department. So they are also linked with marketing department. Okay, they're also linked with marketing department in terms of what is the sales has to be achieved and what is the marketing spend that has to be made. So they are linked with marketing also. So they might even be linked with HR department in terms of employees. Okay, how many employees that the sales sales department wants. So you can see here that the sales department is linked with HR department, marketing, production, okay, and finance. In this way, all departments are actually linked with each other. Okay, all of the departments are linked with each other in various ways. For example, we can see how purchase department is linked. So if you take purchase department in the center, then see they are not much bothered about the marketing. They are not much related with the marketing, but they are related with production, because how many units to be produced depends upon the raw materials to be purchased. Uh, at what cost raw materials has to be purchased, it depends upon what the finance department tells. The employees to be recruited in purchase department uh, have to be informed to HR department, who employs the staff for purchase department. Okay, and the purchase can also be like linked with warehouse department. If a company has warehouse department, they are also linked with them. So any goods received from the warehouse, okay, uh, the warehouse should only receive goods which are authorized by the purchase department. Okay, in this way each and every department is linked with the other, so no department operates on a separate basis here. So they have to coordinate with each other. So that's what they mean by the second point here. So what about the third point? Okay. So the third point is communicating plans to those who will be held accountable. Each department or individual should understand what role they play in helping the organization achieve its plans. Key individuals are held accountable for the outcome of departments or teams known as budget centers. So, see, each each departmental manager becomes a each of this department actually becomes a budget center, and a separate budgeting is created for each of these departments. Okay, and these individuals are responsible for achieving that particular goal. For example, if you take, we'll just take these 5 departments and we'll see like what might be their goal. So we'll take HR department. See, HR department has a goal of uh, like the department is responsible for uh, the the employee the employee cost in the company. So they are the ones who fix what's the salary for employees. So they will be given a target that they should not go beyond a limit. Okay, so marketing has to tell total new sales generated. Sales would be total sales generated, okay, versus target. Okay, finance would be they have to reduce the finance cost in some manner for overall department. Okay, so usually finance, it's very difficult to give them a particular target. Okay, we can put it like what is the uh, percentage of finance department cost, okay, divided by the total sales generated. Okay, when compared to the total sales, what is the finance department cost? Okay, we can ask like that. Or in terms of the total cost, what is this department's cost? Okay, so their objective is to reduce the cost of their department as well as like other departments. So production, total number of uh, quality products produced. Okay, so each department has its own targets. Okay, so each department will be created a budget and they have to stick with that. Okay, so so each department has a target and they have to set within that budget. Okay, so what is about the first one? Okay, translating long-term plans into an annual workable program. Okay, so that also we'll discuss. I think we can discuss that here. So assume that a CEO has a sales target. Okay, CEO has a sales target. So the CEO sales target is 12 lakh units per year. Okay, so he is not going to achieve the sales of 10 lakh units. What he will do is he will appoint managers, okay, sales managers, and he will divide them into divisions. So north sales manager, like that he might have like 4 divisions. Okay, so there are like 4 divisional managers now. So this full target will be broken into 3 lakhs per annum, so that each of them has to achieve this per year. So now the south zone manager, okay, has his own target, where he will have like several junior managers. Okay, south zone manager alone will have like junior managers, so he might have something like zone managers. So it can be like zone manager 1, okay, zone manager 1, 2, 3, like that. So each of these regional managers, okay, north and these managers will have their own subordinates. Okay, so we are only speaking in terms of the south sales manager. So he has like 4 managers. So this 3 lakhs target will be split and given to all these 4 people. So each of them has to achieve 0.75 per year. Okay, so that becomes a target. So what happens is these managers, okay, might also have a monthly target. Okay, so what would be monthly target? So the monthly target can be 75 lakhs of sales divided by 12 months. Okay, so that will become something like 60,000 units per. So it would be 60,000 units per month. Okay, so these managers, okay, these zone managers have to sell 60,000 units of that product. So that is their job. Okay, so how are they are going to sell? See, this that it's what their job is. Okay, it's what their job is. So we have broken the annual target of 12 lakh units into some regions. Okay, and these sales managers have subordinates called as the zone managers, and these zone managers will then have to have their own targets. Okay, it's not zone managers will go and sell the 60,000. They might have like a particular zone. Okay, so for example, if you take India, in India you have south zone. Okay, in south zone you have like 4 states. So within that 4 states, this so these are the 4 states. Okay, and within then each state, okay, within each state there might be around several districts. For example, if you take a particular state, there are 60 districts. Okay, there are 60 districts, just for an example. Okay, 60 districts. So that means each district, okay, each district there will be a manager, for each district, and that manager has to sell how much units per month? So 60,000 units have to be sold, and there are 60 districts. So each of the district manager has to sell just 1,000 units per month. Okay, so look at how it falls into a lower levels. Okay, so each district manager has to keep on selling just 1000 units per month. Okay, and what is the responsibility? Whether these district managers are selling or not, the zone manager will have track of it. Whether the zone manager is working or not, the south sales manager will have track of it. Whether the south sales manager is like selling or not, the CEO will have track of it. Okay, so this is how the a lengthy budget, okay, or long term budget is broken into smaller parts. Okay, and we can also say that each of them have a target. If they exceed their target, okay, if they exceed of selling that target or meeting that target, then they will be given a performance bonus, and if they are unable to achieve it, they might be given a warning. If they are like again and again not achieving it, okay, they will be kicked out of the job. For example, if the north sales manager is unable to sell, then he would be thrown out of the job. Okay, and a new person would be appointed as a north sales manager. Okay, so only when we set a target, we'll know who's performing, who's not performing. Okay, who's just there hanging in that place, just meeting the target. Like that, we can easily find it out. So that's about the translating the long-term plan into annual workable programs. Okay, so now we'll move on to the purpose of budgeting. So we have already seen some of the points in this explanation, but still we'll go. So budgets can be used for planning purpose, for control purpose. Okay, so we set a plan. So for example, this is a plan. Okay, we control, so whether they are achieving it or not, will be like comparing it on a weekly basis, monthly basis, quarterly basis, like that. So that is control. Which manager is performing, who is not performing, we'll also try to know it. Communication, budgets also help in communication, so that each manager here knows what is their sales target. So that is called as communication. Okay, coordination, so coordination is something like this, where each department coordinates with the other. Okay, so that the overall the company is like performing well. Evaluation, evaluation is who's performing how. Okay, so which manager is performing how. So if you have targets, so budgets also work as targets. Okay, so if you see here, budgets work as target. So each manager is given a target and they have to go and achieve that. So that's about evaluation. The next one is called as motivation. So if we fix a target, usually it's motivating. If we fix a target for people, it's usually much motivating for people. And next is authorization. Authorization is approval. So budgets can also be used as an approval. Okay, so what is the sales target? So the CEO here approves the sales target for each of the managers. In turn, each sales manager will approve what's the sales target for the lower people. Okay, so that works as an authorization. And last, it is also delegation. So just like the CEO gives his target to the regional managers, these regional managers give the target to the zonal managers. Like that, it is delegating responsibility. So that's about the concept here about purpose of budget. So we'll move on to what is a functional budget now. So there are different types of budget. Okay, one of them is called as functional budget. So functional budget is itself is a type of budget. Okay, so we could actually put here that it's a types of budgeting or type of budgets. Okay, so within types of budget you have different types. So we have functional, we have fixed, flexible. Okay, then we have approaches to budget. So first we'll see like about what is the functional budgets and all. So functional budget is each department has to create a budget for its own. Okay, so functional budget is a budget of income and expenditure which applies to a particular function of the business. So the main functional budget that you need to be able to prepare are So you should know how to prepare a sales budget, a production budget, a material usage budget, okay, a material purchase budget. So there's a difference between usage and purchase. Usage refers to how many raw material you are going to use in production, and raw material purchase is how much you have to purchase from the supplier. So then labor budget, overheads budget, cash, master budget, fixed and flexible budget. Okay, so we don't need to understand these budgets a lot. Okay, these functional budgets a lot, but we need to understand what are these budgets. Okay, because we also have problems for these budgets. Of course, we have a problem for all these budgets we have, but these are a little bit complicated than the normal budgets. Okay, so let's look at what is a fixed budget here. So I think master budget, we'll just start from cash budget and master budget. So cash budget is, we don't think in terms of, we create a budget in terms of only cash. So we don't take accounting profits, okay, or qualitative items or quantitative items like that we don't take. We only take monetary, okay, items, and that too only cash we take. So non-cash expenses or non-cash any income or anything like that, gain or anything, all those things are avoided. Only cash things are considered. Master budget is, it's a preparation of a cash budget and also a forecast, a forecasted P&L, comma, balance sheet. So we can tell it as balance sheet, or we can also tell it as forecasted SOPL, comma, forecasted SOFP. I can tell in that terms also. So what is a flip? So that's about master budget here. We try to create a holistic budget, okay, where we try to find out what is the cash that the company will have, what would be the P&L for the next year, how it would be, and what would be the balance sheet for the next year we are trying to predict. Okay, so rather than, see, if we predict all these departments, each and every department, if we predict, almost like all the numbers in SOPL and in SOPA is captured. Okay, it's already captured. So we just have to tell uh, how it's how it can, we could use this to create the master budget. Okay, so that's about master budget here. So we'll move on to fixed budget. What is a fixed budget? So fixed budgets can usually be better understood through examples, okay, or through numerical problems. A fixed budget is a budget produced for a single level of activity. A budget will remain the same no matter the volume of sales or production. A fixed budget is not particularly useful for control. It is predominantly used in the planning stage of budget preparation and is often referred to as original budget. So what is a fixed budget? So there's something called as an original budget. Okay, so these are usually the targets. A original budget or fixed budget is usually the target. Okay, so we can say like this: a company wants to sell units it has a sales value, then some variable cost, then they have some fixed cost, and finally they reach a profit. Okay, so sales, they want to sell 1000 units. Okay, amount of sales is going to be 10,000. Variable cost is going to be 4,000. Fixed cost is going to be 2,000, and profit would be 4,000. Okay, so that's about the concept. So this is the original budget. So this target is actually given to each manager. Okay, for example, sales units has to be sales units, and amount is sales manager's responsibility. Variable cost and fixed cost would be like production manager's responsibility, and finally we get the profit. So to set a target that sales manager has to go and achieve 10,000 worth of sales, the maximum cost of production should be only 4,000 and 2,000 fixed cost. Okay, so only when you give a target like this, people will achieve the intended target. Okay, but the problem with fixed budget is it's always fixed. It's a target. So targets cannot be like keep on shifting. So you should have one single target for a particular period. So the problem occurs when he achieves some goal. Okay, he achieves a goal. Okay, so this is actual. So actually he has sold 1200 units. Okay, this seems to be 11,000 of sales he has achieved. And production manager, okay, he has achieved, production manager has got a cost of 4,500 for 1,200. His fixed cost is 2,000. And finally we try to find out what would be the profit. So the profit would be, I think we have to work it out. Okay, so 4,500 is the profit. Okay, so now the question is this profit good enough for the company or not? Okay, should we like give a high remuneration or a high bonus for the sales manager or not? Okay, so that is a kind of argument. So how will you argue this? This is based upon flexible budgeting. Okay, so flexible budget is one which by recognizing cost behavior patterns is designed to change as volume of activity changes. A flexible budget should represent what the costs and revenues were expected to be at different activity levels. It is particularly useful for control as the original fixed budget can be flexed to show the costs and revenues for the actual level of activity. So what they are meaning here is we cannot compare the original and actual directly. Why? Because we thought of selling 1,000 units, okay, and we have sold 1,200. See, some of these costs are variable, okay, and some of them are fixed. For example, sales value is variable, okay. The more the items you sell, the different can be the price. Variable cost is by nature it is variable, and this is fixed. So how can you compare different uh, cost and income behaviors in a particular way? So what happens is we have to compare them with something called as a flexible budget. So we create the concept of, so to compare, okay, we create something called a flexible budget. So flexible budget, what it does is it takes the actual units. It takes the actual units into account. So the 1,200 would be the budget. See, this is still budget only. Still flexible is a budget only. Okay. So 1,000 units actual alone we take it, but we take thereafter the numbers of original budget. So how do we take it? Okay, that's a question. So how do we take it is the per unit, okay, the per unit cost of sales, or uh, the selling price per unit, I think that would be the correct. The selling price per unit would be 10,000 by 1,000, right? So the selling price per unit is 10. Okay, this 10 multiplied by the actual units. Okay, actual unit is 1,200. So what is the amount? So the amount would go to 12,000. See, that is he should have sold, as he has sold 1,200 units. Okay, the selling price should have actually been 10 rupees per unit. Okay, so he should have sold at 12,000. Okay, the next one is variable. So the variable, the same logic we can tell. He should have produced at a cost of 4,000. So his cost is, he should have incurred a cost of 4,800. Okay, 2,000 is fixed, so we don't need to worry about it. So the total profit should have been 12 minus 48 minus this. This should have been the profit. Okay, for 1,200 units of sales, okay, this should have been the profit. Okay, so now what we do is we have to compare. What do we have to compare? We will compare what is his actual So we can simply okay. So I think this has to be deleted. So we have deleted. So we have to compare the flexible budget with the actual. Okay. So he should have sold 1200 units. Okay. And he has sold 1200. That's great. But he should have made an income of 12,000, but he has made an income of only 11,000. Okay. So 11,000 is actually bad. That's a problem here. Okay. So I think we should minus like this. Okay. So see, this is a negative one because he should have got 12,000 as income, but he got only 11,000 as income. What is the problem here? The problem is he has sold same units, but his selling price he has reduced. Okay. So selling price has been reduced to improve sales. Okay, so that has been a problem. So should we like give him a bonus or award or reward? The answer depends upon the company. If the company feels that's great, that's fine. Selling the units itself was difficult, so we'll give him a bonus. If the company feels perfect, it can be given. If the higher management feels that no, he has like cheated the company by lowering the selling price, then they don't need to give. Okay, but let's look at what is the production manager has done. The production manager should have incurred a cost of 4,800, but he has incurred only 4,500. See, this is a good thing. Okay, so the production manager should be appreciated. Okay, he should be appreciated. So the next one would be fixed cost is same, so we don't need to worry about that. It is same. Okay, profit has gone little bit lower. Okay, why profit has gone little bit lower? If you see here, when you add, because of the selling price, okay, our sales manager 1,000 rupees we should have earned, but we have lost. But production manager has done a really good job of saving us 300. So totally 700 we have lost. Yes or no? The answer is yes. The difference between the total profit, we should have got 5,200, but uh, we got only 4,500. So both these are like matching. Okay, both these are matching here. That means because of the sales manager, the total profit has boosted, but still it has not gone to the level where it should have been. Okay, so that seems to be the problem here. So flexible budget is useful for a lot of things. Okay, and when we do a sum, you will get a better understanding about how it works. So from here on, we have different types of approaches to budget. Okay, so different companies use different types of approaches for budget. So what are they? Number one, it is called as top down versus bottom up budgeting, incremental budgeting, zero based budgeting, rolling budget, activity based budget, and feed forward. So we won't be like looking at all of them because some of them are like pretty much complex, so we won't look at all of them. So we'll start from the imposed or top down budget. So the imposed or top down budget works like this. The top down budgeting refers to a budgeting method where senior management prepares a high level budget for the company. The company's senior management prepares the budget based on its objectives and then it passes on to the department managers for implementation. Managers may put forward suggestions for the budget before the budget preparation. Whether their contributions to budgeting process will be used or not is at the management's discretion. After the budget is created, the management makes specific allocations to different departments, which must then create their own budgets based on their budget allocations and goals. So, how does this work? So, in imposed budget, it works very similar to what we have discussed here. Okay, in this kind of a model, I think we'll copy the model so that it would be quite easy for us to discuss. So in imposed budget, the top management will decide everything, like how the goal has to be set, how it has to be achieved, what is the target for each of the managers, like that. The top management will think about everything and they will simply delegate or give the targets to the lower managers. Of course, lower managers can give their ideas or opinions to the top management, but still, ultimately, it's the top management will decide whether to listen to their suggestion or not. Okay, so mostly it is like the top management creating the plan and giving to the lower managers, and the lower managers just have to achieve that target. So they might not have any involvement in the budget creation at all. Okay, so what is the advantages of this kind of a method? See, this is like very authoritative, okay, but still it saves the manager's time. So each manager don't need to think about how to create a budget. Okay, so they don't need to waste their time about thinking how to create a budget. It's already done by the top management. Next, managers may not have the skills to set a budget. So these managers might be like sales managers who are experts in sales, but creating a budget requires support from management accountant or a management accounting department, like that. So usually the managers will not have that kind of skill to create a budget. So why do activities where they are not an expert? The next one is managers may build budgetary slack into the budget. For example, if each of these people have to create a budget and give it to the top management, what will happen is this. It's called as budgetary slack. Okay, we'll see what is budgetary slack. See, budgetary slack will work like this. We won't need to take all managers, but we'll take this manager out. Okay, see, north manager, if he pushes and puts a lot of effort, he will achieve 3 lakh units per year. But what he will do, he will try to achieve a lower target, because lower target achievement is like quite easy and also like comfortable for him. So he will say, it's if the CEO asks what can the target that can be achieved is, he will say 2.5. Rather than telling 3, he will say 2.5. Similarly, all other managers will also say the same thing. All other managers will tell, sir, achieving 2.5 itself is very tough. Okay, so that can be the target. But when all of this is combined at the top level, okay, at the top level, the CEO cannot sell the his usual target of 12 lakh units. Okay, his target would actually become only 10 lakh units. So if we so the problem is this: if these managers put a lot of effort, they can achieve 3 lakhs. That is 12 lakh units per year. They can easily achieve. They can achieve, but they don't want to achieve that kind of a goal and all. They want to achieve an easier target. So if the CEO asks what target can be achieved, they will simply tell a lower target, because they are worried much about how much effort to be put. Okay, so this is called as budgetary slack. So we'll mark it here. Okay, this is called as budgetary slack. So senior managers have the overall view of the company. Okay, so the top managers usually have the higher idea, like who are the competitors, what is the evolving technology, who will get affected, like that. They'll have a better view than the lower level managers, and budget sets by senior managers are more agreeable by other managers. So once a budget has been set by the senior managers, others just have to go and achieve it. Okay, so These are the advantages here. Okay, these are the advantages here, but there are also like quite a number of disadvantages. Okay, so how do we know what are the disadvantages? We will find out what might be the disadvantages in the next topic. Okay, in the next topic we'll get that idea. So the next topic is called as participative or bottom up budgeting. Okay, what is participative or bottom up budgeting? So what we saw in budgetary slack. Okay, so that is what is participatory budgeting. That is, the CEO asks the lower level managers to give a target. Okay, and the lower level managers will ask their subordinates to give a target. So it works like from the root level. Okay, the lowest level of employee, for example, in this case, okay, I think this is what we got. This was what we originally did. Okay, so how does a participative budgeting works? So first, the zone managers will ask the most lowest level sales managers, who are the district sales managers. So they'll ask them how many units could be sold. Okay, so the lower level managers will tell, sir, we can sell maximum 50,000 units. Okay, see, we can't say it is slack. Okay, sometimes it can also be the only way to create a budget. So they will say we can sell 50,000 units per month. Okay, so 50,000 units per month would lead to how much? See, that moves to only 30 lakhs. Okay, so that becomes a problem. Okay, when we ask lower level people to give a target, okay, they can give a higher or a lower target. So if they say that, sir, we can maximum achieve like 40,000 units or something, okay, uh, per month, okay, per month. Mm, okay, now I think we got the idea. So see, each district has to sell how many units? They have to just sell thousand units per month. So that is the actual target. So look at how this will change. They will simply tell, sir, we cannot achieve 1000 and all. Okay, we can achieve 900. Okay, if they tell like that, what would happen? So if they tell like that, 900 units being sold by 60 districts will totally become a number like this. 54,000. Okay, so the number of total units will not be sold as 60,000, it will become a 55,000. Okay, so 10% of the sales is cut. Okay, if 10% of sales is cut here, this will not be 75 lakhs. Okay, it will become a 10% cut here also, so it will only become something like 0.68, 68,000 units would be become. So adding all this together, adding all this zone wise, a 10% cut in sales here will lead to a 10% cut here. So it won't be 3 lakhs per year, it will be 2.7 lakhs per year. So overall, this sales target will not be 10, 12 lakhs, it would be cut by another 10%. So at each level, what happens? The lower level target, if it is cut by 10%, so that is from 1000 they have cut by 10%. From there on, everywhere, okay, 10% is like cut. Okay, so the overall target will become 12 lakhs. So is it a good thing or not? See, in certain places, there is no other way but to involve the lower level employees to sales for sales purpose. Okay, so in those areas, we have to apply top participative budgeting. For example, in the sales of a high-end machinery or a high-end software or a very premium cars, okay, so or premium products. So these kinds of luxury products, luxury items and all, this is how they go for budgeting, because the budget cannot be usually set from the top, it is usually set from the lower end. Okay, bottom up budgeting is a form of financial budgeting where a company allows each department to set their own budget. Each department creates a list of expenses and cost projections, which is then submitted to review from senior management. Okay, so each manager will create a budget and they'll give it to the top management for approval. If these are not agreeable, they will again negotiate the numbers and again it will be approved. Once agreed, these separate budgets are added together to form the company's overall budget. So it starts from the 60 districts, all that 60 districts total is added up, then zone total is got, all zone total is added up, the sales, the divisional or regional sales manager target is got, then all these regional sales or state-wise managers target is added, and finally the CEO sales target is found out. Okay, so it is also referred to as participative budgeting because department managers are given a role in setting their own budget. Okay, so what is the advantage here? The advantage is the motivation level of all managers will be improved because it is their target and they have set it and usually they will achieve it. Managers will feel that their opinion has been listened. See, failure to achieve the target is a personal failure because they have given a commitment and they have not fulfilled it. The lower level managers will have a more detailed knowledge of departments. See, the managers at the root level know what is happening at the customer level. So he will have like more inputs to the can give more inputs to the company here. Okay, so how can we understand the advantage and disadvantage of uh, top up and bottom up budgeting? So we can put it like this. I think we'll type it here. So there is top up budget and the participative budget. Okay, so you have an advantage here. See, the advantage of this participative, okay, will become the disadvantage here. So the advantage, so we can put like this, the disadvantage of top up would be the advantage of participative. Okay, and vice versa, the disadvantage of participative budgeting will be the advantage of top up budget. Okay, see, both are like opposite concepts. So once you understand one concept, the each concept's advantage, then you can cross relate it to the other. Okay, and get the idea. So here you have to just write top up budget's advantage is its own, disadvantage is this one's advantage. So you can cross relate and still get the answer. So we'll move on to the next one. So the next one is called as incremental budget. So an incremental budget I think we can push a few lines down. So an incremental budget starts with previous period's budget or actual results and adds or subtracts an incremental amount to cover inflation and other known charges. It is suitable for stable businesses where costs are not expected to change significantly. So incremental budgets are useful for companies which are very stable in nature. Okay, if they are stable in nature, then we can apply this incremental budget. Okay, so what they do is, for example, a company has like units. Okay, we will take like a dairy company. We'll take a dairy company. So usually dairy companies will have sales and cost and everything. So we can put it like this. What would be their quarter 1 sale, quarter 2 sale, quarter 3 sale and quarter 4? Okay, so they might have like 1000 units. Here they will have like 1050 units. Okay, just like 5% they go up. Here they have 1100 units, and again here they might have 1050 units. So every quarter they are like little bit, 20-50 units they are increasing. Sales also would be like similar to their uh, to their to the units. So we'll assume that sales price is 10. So we can easily find out uh, what would be the sales amount, and cost is like whatever is the sales out of that, 70% is the cost. 70% is the cost. So they can, that also they can easily predict, and they can also predict their what is their profit. Their profit could be sales minus cost would be their profit. So they can easily tell what could be their profit. Okay, so the total year profit can also be found. Okay, we can also find out the total if you want. If you want to find out the total for the full year, okay, this is an estimated total for the next 1 year. What would be the okay, so we got the total also here. So this is about incremental budget, where things are like very stable in nature, and we can also predict them quite easily. Okay, in those business only we can do. So advantage is it is very quickest and the most easiest method in budgeting. It is suitable if the organization is stable and historic figures are acceptable. The disadvantages of incremental budgets are builds in previous problems and efficiencies. Okay, so see, for example, this cost itself might be too high. Okay, the company has to control this cost, but look at what happens. Rather than controlling the cost keeps on going up. Okay, so this is not a best budget to control costs and all. Okay, and uneconomic activities may be continued. So the same thing, so any inefficiency or useless things might also be done. And And the last one would be managers may spend unnecessarily to use up their budgeted expenditure allowance this year, and thus ensuring they get the same or larger budget next year. For example, if we take the production budget manager, we are giving him 7,000 rupees or amount of cost that he could spend. Okay, what happens is he will never try to reduce this cost, because if he reduces his cost, okay, then he has to again reduce from there on. So what he will do is he will never try to reduce the cost here. Okay, and he will only, if it's like allocated, he will fully use that amount. He will fully use that amount, and finally he will only give a bill for it. Okay, so there is no encouragement for him to reduce the cost at all. So that is the drawback of this method. To overcome this kind of laziness on the part of the manager, or to avoid this kind of inefficiencies in incremental budgeting, there has been another budgeting method called as zero based budgeting. So zero based budgeting is like quite different, and this is how it operates. it is a method of budgeting that requires each cost element to be specifically justified as though the activities to which the budget relates were undertaken for the first time. Without the approval, the budget allowance is zero. Okay, so what do they refer to here? Here, assume a manager assume that we take an example of a college. Okay, so in a college, they have to spend money every year on some activities. So every departmental manager, departmental HODs, okay, they will ask for some budgetal amount to run the department. They'll ask for some amount. Okay, so usually if the principal asks like what amount do you want, okay, what amount do you want, they'll usually tell a very high amount. Why? Because if they require like just uh, something like 5 lakhs, okay, they require just 5 lakhs to run their department. What they will do is they will ask for a higher amount. They will ask for a higher amount. Okay, so usually I think we'll put like this. So 5 lakhs is required thing. Okay, they need 5 lakhs to run the department, but will they ask that amount? The answer is no. What they will simply do is they will ask for something like 7 lakhs. Okay, so this is what their demand is. So this is what they will ask. Okay, so they'll ask 7 lakhs, but even though their original spending would only be 5 lakhs. Why do they ask like this? Because they have to then negotiate with the principal, and principal would allocate after negotiation something like 6 lakhs. So what is actually uh, awarded? Okay, what is actually awarded would be 6 lakhs. So this becomes a kind of a game between all these parties. So to avoid this, what we can on an alternative way is to find out through ZBB. Okay, we can go for ZBB. In ZBB, Z-based budgeting, the department HOD has to give a submit a budget. Okay, so he has to give a breakup for all this 7 lakhs that he is demanding. Okay, so it could be like for new computers to be bought, new computers, he asks, I think computer spelling is mistake. Okay, for new computers, he requires, he demands, or we put this as demand. Okay, demand. He asks for around 2 lakhs. And for painting the department, he wants another 2 lakh. And uh, for books, library books or something, for library books he wants around some another 1 lakh. Okay, he wants a 1 lakh. And they want to bring best faculty from the outside. Okay, so they want some guest faculty who are like really good to teach. So for that they require another 2 lakhs. Okay, so when you add all of this, we get 7 lakhs. Okay, so 7 lakhs as a total. But what happens is when this budget is submitted to the principal will ask out of this which are the most basic, which has to be done this year itself. Okay, he will ask for which is the basic of these that has to be done, and which are like can be postponed. Okay, can be postponed to the next year, like that he will ask. So what happens is the new computers, okay, already there are like old computers, so new computers have to be bought. So this is becomes basic. Painting would have been done last year, so this year we don't need to do, so it is postponed to next year. Books are compulsory and they have to be bought. Guest faculty, we can't say that all, we don't need like too much of guest faculty, so he could allocate 1 lakh just 1 lakh for this year. Okay, and that would be the maximum. So look at how much happened here. So totally the total amount has actually become only 4 lakhs. Okay, so here we are starting from a scratch of zero. First, the principal tells go and prepare a list of why you do, what is the things you need and why do you need it. Okay. Then then when it's submitted, he will tell split the list into two parts. One is basic and which is like which can be postponed later. So these are like basic. We cannot like go without them. Okay, to run the year. So these become basics for the year. The other things become the either they can be postponed, okay, or the budget can be increased in the next year. Okay, so this is about zero based budgeting. So it is like hugely different from what is an incremental budgeting. Okay, so incremental budgeting can also be like this. Okay, where uh, it can also work like this also. So we have already given an example. So the departmental HOD in 2020, he might have given a budget. He might have got a budget of 6 lakhs. Okay, he might have got a budget of 6 lakhs. Okay, and now for 2021 he will say, sir, because of cost increase and all these kinds of increase, okay, at least give me some 10% increase, so that will become 6.6 lakhs. Okay, so this is where incremental budgeting creates problem. This is where incremental budgeting creates problem. Why is this additional, why is this see, what the principal will think is last year it was 6 lakhs, this year it is 6.6. Okay, so they are asking for an additional 60,000. So is this 60,000 really worth or not? He will only think in that terms. Okay, he will not think in the terms of, first of all, is this 6 lakhs itself, is it worth or not? He will not think in that terms. Okay, so it usually works in the manner of whether the first 6 lakhs itself is worth or not. How do we know? We have to do a ZBB. Okay, we have to do a zero based budgeting. So let's read the theory so that you will get a better idea. Activities are identified by, I think we were here. Okay, so it is suitable for allocating resources in areas where spend is non-essential. Okay, so where there's no essential spending, we can apply this, but we can also apply it in many areas. Okay, we can apply it throughout the company also, we can do it. So non-essential areas is like in advertising, in R&D, training and all, it's like compulsorily we can apply this concept. Okay, so what are the steps in this concept? The steps are,